Hey everyone, welcome back to Corporate Decoder. Today, Frexi just filed its quarterly report, and I am seeing a huge drop in asset value that demands a closer look. Quick note, this is not financial advice, just my take on public filings for educational purposes. The value of XRP, the digital asset this ETF holds, took a massive hit, and it is directly impacting the fund's net asset value per share. So, let's dive into the numbers for the Franklin XRP Trust, or XRPZ as it is known by its ticker. This report covers the quarter ending the 30th of June 2026. First, look at the combined statements of assets and liabilities. Here we see the fund's total assets. At the end of June 2026, the investment in XRP at fair value was about $236 million. Compare that to the 31st of March 2026 when it was around $215 million. That sounds like an increase, but here is where it gets tricky. This is the critical part. The net asset value per share was $14.63 back in March, but by the end of June it had fallen to $11.39. That is a drop of over 22% in just 3 months. And why did this happen? Well, the value of XRP itself plummeted. The report shows us exactly what happened to XRP for the period from the 1st of April 2026 to the 30th of June 2026. The average XRP price was $1.3, the high was $1.53, and the low was $1.03. But importantly, the end of period XRP price on the 30th of June 2026 was just $1.04. That is a huge decrease, and it explains the dramatic drop in the ETF's value. This section of the report highlights the financial performance. For the 3 months ending the 30th of June 2026, the fund experienced a net realized and change in unrealized gain, losses on investment in XRP of a negative $67.4 million. This was almost entirely due to an unrealized depreciation, meaning the value of the XRP they held went down significantly. So while the fund holds XRP, its value is directly tied to the volatile price of XRP itself. Let's look at the statement of operations. It shows a net investment loss of $38,563. This might seem small, but it is important to understand what it represents. This is basically the cost of running the fund, like the sponsor's fee minus any reimbursements or waivers. The report also notes that the sponsor waived a portion of its fee during this period. This fee is 0.19% of the net asset value. Looking at the financial highlights, we see the ratio to average net assets. Gross expenses are 0.19%. This is the sponsor's fee, but net expenses are only 0.06%. This means the sponsor is covering some of those costs or waiving them. This is a common practice for ETFs to attract investors, especially when they are new. Now let's examine how the fund's shares changed. The changes in the shares table shows that the balance at the 1st of April 2026 was about 14.7 million shares. By balance at the 30th of June 2026, this had increased to over 20.7 million shares. This means new shares were created, likely as investors bought into the ETF. The amount column shows the dollar value associated with these share creations. It is interesting to see the creation of shares in kind. This means some investors likely contributed XRP directly to the fund in exchange for ETF shares rather than using cash. This is a common mechanism for cryptocurrency ETFs, allowing for efficient creation and redemption of shares. The report also mentions the sponsor's fee waiver. From the ETF's launch in late 2025 through May 2026, the sponsor waived all fees on the first $5 billion of assets. This is a big incentive for investors. However, the fee waiver period has likely ended or is winding down, meaning these net expenses could increase in the future if the sponsor doesn't continue waiving fees. This is a crucial point about the fund's strategy. The concentration of risk section clearly states that the fund holds only XRP and cash. This means the fund's performance is entirely dependent on the price of XRP. This is known as concentration risk. If XRP's price falls, the ETF's value falls, and vice versa. The report warns that XRP has experienced extreme volatility and could continue to do so. This section emphasizes the direct link between XRP's price and the ETF share price. It is a straightforward explanation that investors need to be aware of XRP's price movements to understand the ETF's performance. Finally, let's touch on controls and procedures. The report states that the fund's disclosure controls and procedures operated effectively. This means that the information required by the Securities and Exchange Commission is being properly recorded, processed, and reported. It is a standard statement in these filings. indicating the company believes its reporting mechanisms are sound. Now, looking at these results more broadly, the Franklin XRP ETF is clearly exposed to the significant volatility of XRP. The substantial unrealized loss of over $67 million in just 3 months highlights this risk. While the sponsor's fee waiver is a positive for investors in the short term, the fund's long-term success hinges entirely on the price appreciation of XRP. The biggest concern here is the lack of diversification. Unlike a traditional ETF that might hold many different stocks, this one is a single bet on XRP. What I'm actually looking for is whether XRP can recover and sustain its value to offset the heavy unrealized losses and the ongoing costs of managing the ETF. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Check out the Discord in the description.